why do some people prefer trading ETFs versus single stocks? This was a question I had from a client a couple of days ago, and I was trying to advise him to go ahead and trade ETFs instead, sector ETFs, because he was trying to play a sector, and the sector would do well, and the individual stocks would do badly, because he had it in his mind that if he chose the essentially the penny stock version of that industry, he'd make far more, like
Ah,
getting the junior miner in order to play the gold miners. And I
got
was
it.
like, you're taking such risk there. And the complaint he was giving to me was that he's failing. He's losing money all the time. I go, yeah, I know you're losing money all the time, but the industry's doing well. So play the sector ETF.
Hmm.
You get all the benefit of the exposure. And he's like, okay, but I don't get the same upside move. I say, okay, well then go in crypto. What are you doing trading battery stocks, and you're looking for a 3x on that? That's insane to me.
Yeah. And well, I think that's kind of the whole point about investing in an index in the first place, is that we don't know which ones are going to be the runners and which ones are going to be the losers. The whole point of an index is to distribute or diversify that risk across all the participants in that sector, all the constituents in that sector. So if there's any type of meaningful move in an industry, like, energies, you could use XLE, or the finance industry, you could use XLF, or even just the technology industry, you can use XLK. The exposure you're going to get is to the broad sector of those companies, and that allows you to capture all of the winners while not being completely beat up by all of the losers. So it's really just about risk reduction. You're diversifying into a broader basket of stocks so that you're not taking a hit on one single stock, completely demolishing you. Like if you had gotten in, 2 days after Roaring Kitty mentioned GameStop, bad time to get into GameStop. But certainly GameStop gets picked up in one of those sector ETFs, and so you can ride a bit of that wave.
You also get the advantage of, if those ETFs are at all targets for passive investing, you have these flows that end up going
Mm,
to the regular flows that aren't stopped, right? Those flows, they're not the employees who are allocating to that in their 401ks are not like deciding today to sell it. And so you get to have this long only bias and go, okay, generally speaking, this should go up and to the right as long as those flows are continuing, which is the thing, that's why people trade one of the reasons people trade the main indexes, but there are smaller ETFs, sector ETFs, that have the same sort of dynamics.
yep, absolutely.